Martin from Secrets, the channel for learning about trading and investing. Welcome to Daily Stock Market Analysis Show, where we look at what happened in the market during the day and then try to learn something from it and plan up for a better trade for the next day. And today, what kind of day we had? Down day, but still the 17K was held by the market. It did drop down and then managed to hold the 17K, and that's probably because it's an expiry. So consolidation is what's happening. How do we know that? Let's get into the charts and see what the charts say. So weekly, by the way, we are still in the downtrend. So the medium term we are in the downtrend. Then after hitting resistance, that we know. So let's get to the daily charts. So we had an up day yesterday. We had a down day today. Right? We previously had a down day. Then we had an up day. So it is consolidation that's happening. Look at Banknifty, it's even more evident. 4 days, 5 days, it's green, red. So that is pure consolidation. Look at this Bollinger Bands. It is a bias towards the downside, that is that, but consolidation, squeezing, contraction, turning to expansion is what is happening, right, on the downside. But by Nifty, it is not that much evident. It's clear consolidation, not an expansion bit is there, right? So So consolidation cannot continue for a longer period of time. It would eventually break down or break out. Either of that will happen. But since it's the daily charts we talk about, this cues can extend for a longer period, right? Until that consolidation contraction comes closer and closer. Right? If that is not happening, anytime it can turn bearish. Right? So what did we lose today? So remember, this is for October 14th, tomorrow Friday, and we had lost today 0.64. That's 100 points plus 109 points lost. And it's an inside bar. Inside bar is a candle that formed inside a previous candle. So right now we can see that this candle is formed inside the previous candle's bar. For Banknifty, that's not the case, but it is still inside that 3-4 days before green candle. Right. So inside bar once again reiterates the fact that we are consolidating, right? And 1.26 is Banknifty that we lost. So 409.94, that's a big cut, right? Banknifty had lost nearly 500 points. Nifty lost nearly 100, means 100 points plus, right? So one is the inside bar, otherwise also is a bearish. It's also kind of inside bar if you look at the last 4-5 days in Banknifty. So consolidation is very evident, and intraday was very volatile. Yesterday it was super volatile with 3-4 views, V-shaped moves. Today it was one V-shaped move. Let's get into and see that one shape, right? It fall down 1.5 to 1% in the indices, and then moved up half of that, and then gave up half of what it had moved. So that is the kind of volatility that is there. But as an expiry there, DK benefit was there. So people would have made money if they had traded in options intraday. In indices, it still have the double top pattern, that's a negative, and it is resisting below the weekly trend line, that is also a negative. We have already seen that at the beginning. One more negative is 100 DEMA, exponential moving average, was conquered yesterday by Nifty, that's given up. 50 DMA was conquered yesterday by Banknifty, that is given up today. Right? So both having resisting below the 20, 50, 100 like this. Resistance is not changing on the Nifty. 7345 resistance upside, 7500 resistance after that, 16650 support gap downside, and then 16750 support on the Nifty. Banknifty, small change, 39200 can be a resistance in the upside, 39759 can also be a resistance after that, previous week highs. 38369 would be the support in the downside, previous week low, and 37950 would be the support after that, right? Bollinger Bands are sideways. We have already seen what Bollinger Bands are indicating. It is slightly bearish, not slightly, it is bearish biased on the, because of the less than 20 DMA, plus it is expanding on the downside of the Banknifty. Nifty, it is having the bearish bias, but it's not expanding, it is pure sideways. That's what it indicates. Bands. Momentum is falling sideways. We had seen yesterday. It was rising little. Today it's falling. Banknifty also falling with the sideways momentum. Momentum is sideways. Bollinger Bands also say sideways. Price action also indicating sideways. Consolidation basically. Trend is kind of in the bear zones. It has not crossed over. It is bear zones, but not having enough strength on both indices. and little spike only, but it's about 20 to 30 picks to be cautious. Futures OI and options OI and BCR all will not be very much valid because it's a new expiry that's going to happen for the October 20th weekly expiry starts trading actively from tomorrow. So by tomorrow we can understand something from the OI data, but still for reference we are saying that it's a short field that happened in the Nifty of futures OI, long run binding, it is also bearish on the Banknifty. On the options OI, what is shown in the October 20th weekly charts that 17,000 is triangle. 17,000 is for the highest put and call rating, both are there. 17,000 is crucial, is what it indicates. It may not be relevant as I said earlier because it's a new weekly expiry. That's going to start from tomorrow actively trade. 37,500 and 41,000 is what from back. 0.81 and 0.63 Nifty closer to the bullishness. Banknifty is far away from the bullishness as the PCA that is shown as of now. Please don't give too much value on that. Sector ID in reality underperformed today. It's nearly 1% of fall has happened. All other sectors were closing flat. Right? And all the sectors are managing to be in the sideways, not in the bearish ones yet. Heavyweights HDFC ICICI Bank fell 1.4% nearly. Infi Kodak Bank also fell, just is nearly 0.5%. Right? Others are all closing flat. Heavyweights, the 5 or 6 heroic stocks we are talking about. But all the heavyweights are on the sideways, hanging on the sideways, not in the bearish. But HDFC has slightly slipped to the sideways, slightly slipped from the sideways into the bearish zone. So be cautious on that. So heavyweights also sideways, sectors also sideways, price sections sideways, nominal sideways, trend sideways, mix little danger zone. Right, that's what wrap up. So today's institutional selling has not come in, data has not come in yet, but yesterday it was again another fifth, probably this is the 1, 2, 3, 4. It's the fifth day of fire selling that would have happened today. Yes, are not buying yesterday also much. Today also they might have, somebody would have bought because market did the reversal, right? So you'll have to wait and see that data to come in and then, right? But institutional support is not that great, right? Especially when FIs are buying. But yes, whenever FIs are selling big, DIs come in and buy. That's what is happening. Crude is flat, kind of, it is small pullback has happened after it has reversed and 22% move up has happened, but now it is again pulling back and then settled less than 87. So it's not rising above the 90 levels, at least that's relief, but it is in the sideways mode as of now. Could maybe worry if it again shoots above 90, 100 and all that levels, but it's in a channel, so it can go up to the top of the channel anytime. Possibility is there, so that's not a worry. But for time being, less than 90 is relief. Dollar is rising, that's the most dangerous thing. Some cool off has happened today on 112.73 is what it is, bullish momentum itself. Slightly falling into the sideways, you can say. So if it is falling into sideways, it may pull back a little more. Some pullback is there, but still at a very high level of 112.70. We were talking about 80, 90 in a few months back. Now it is 112.7 is where the dollar is, and it's multi-year high as usual. So USD and our currency pair, so rupees at lowest level 82.17. Bullish momentum maintains. Some pullback has happened after a big breakout that had happened, right? So dollar and dollar rising and rupee weakening is a concern. Gold is consolidating and trying to flattish as of now, but it had given a pullback after it attempted to break out of the resistance from where it had support from where it had fallen. Now it is climbed above there and then it's trying to consolidate at that level as before, no changes. SX flat green index is also, this index also is at a major support zone. Previous swing low, if it is breaching we have trouble. So right now it is little green. Let us check that both SGX and US indices in the morning only, then we'll get some clue. Let's look at this US markets where what we're talking about is this, right? It's at a major support zone. This is not this is the futures of the Dow Jones. It's a major zone, so it's showing red 385. There is some event that is happening, Fed meeting minutes, or some events are there this week. We'll have to see this tomorrow, but any breach of this previous low of 28,777 would be trouble. So you have to, and this move 400 kind of 400 points down as of now. So if this is continuing for till next pre-market tomorrow for us, then we will naturally get hit. We'll lose the 17K is what it indicates. So gap down may come in if it returns, but you never know. It's a all night for trading. But keep a close watch on this. If any book moves, then definitely all the charts, forget about it. It will be, it will impact us, most of the time. Right? So WPI data, India data is coming tomorrow. Inflation data is coming. US CPI data is coming tonight, I believe. Right? Tonight it is coming. So tomorrow, today will be very volatile. US markets will be there. So we'll have to check all this tomorrow. Pre-market. Now that's when we get idea. But as of now, that's a summary, right? Rupee and dollar trouble, US market trouble, and because of recession and Fed hikes and job data and all that. And charts are also bearish. Momentum is kind of sideways, not a bearish, but trend is bearish overall, short term, and that's it. So just to wrap up what we had seen with the different indicators, it's consolidation. We have already seen that, right? But it's consolidation with a bearish price because the trend is bearish, momentum is falling, band is expanding downside, the Banknifty price resisting below the moving averages, Fyers are selling. It's all in favor of the bears, for all the bears, right? What supports the bulls is just the PCR, which is good for Nifty, but does not is not valid 7 days, 5 or 6 days before the expiry. That's the only thing for the bulls. Nothing much in favor of the bulls, except that 17K was held and all that. And the market view remains to be mild bearish. Mild, why? Because our market is very resilient despite the global markets always falling. But that mild can change to moderate or heavy anytime. Okay? Because the US markets are in trouble. Dollar is rising up and rupee is in trouble. Oil can spike up anytime. VIX is about 20. So best trade would be to stay out, especially on a Friday when there is no decay. If you are trading in options, stay out of it if it is spiking about 20. Get into trading only after it cools up below 19, 20, that levels, right? 16,650 would be a support, 500, 16,500, 650, 750, that's a good support. 37 Banknifty also good support. Anything below that, we may have big falls that can come in. And the upside similarly, unless and until 500 is closed, only then we can talk about 18,000. Only if then we can talk about any bullishness. Till then we'll be either sideways or bearish. So that's a view. Always hedge your positions and protect your long-term investments in stocks with the help of option strategies. If you're not aware of that, check your playlist, and that's it. On my bearish views, this study of the markets today that we have done from the charts and different parameters, if that helps you to frame your view for the next day and the trade plan for next day in some way, then consider hitting the like button and then share to maximum. Subscribe please if you're not subscribed, right? We have very few subscriptions and I appreciate the help in this regard. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.